anyone who wants higher income is not going to like that. But that's the thing with annuities, and that's what I love about annuities, especially with MIGA rates right now. Right now, rates are very, very high. Hey, welcome to the Guaranteed Retirement Guy Show. So, I want to chat with you a little bit about annuities and whether or not they are callable. What does it mean to have an annuity that is callable? Well, I'll tell you what. You can't call an annuity. So if you have a rate that's locked in, that's 5.5, maybe even 6%, that's locked in. It's never going to go down. Now, if you want to compare that maybe to a callable bond or a redeemable bond, essentially what companies do is, they're trying to grow and they're trying to get more money. And so they will issue a bond, which of course will give them the needed funds to be able to do that. A lot of times, some of those bonds will be callable or redeemable. And basically what that means is maybe they're giving you a high rate right now, but if rates start going down in the next few years, they might decide to redeem that debt and reissue it at a lower rate, which of course, anyone who wants higher income is not going to like that. But that's the thing with annuities, and that's what I love about annuities, especially with MIGA rates right now. Right now, rates are very, very high. We're looking at a lot of them being 5.8, 5.9, and there's a 10-year right now with Equitrust that's still 6%. And so if you're thinking about locking in a high rate of return, and when I mean lock it in, it is locked in. So if you decide to lock in it for 10 years, then even if rates go down over the next few years, that rate is still locked in at 6%. It's never going to go down until the end of that term, which is pretty awesome. So if you're looking for an annuity that will give you a high rate of return, definitely consider fixed annuities. Now, on the income side, of course, you've got income annuities. They're paying out quite a bit right now for income. And it's just because, we live in a very, very high rate environment, and that is definitely affecting those annuity payouts. It's a great time to lock that in as well, because if you're thinking about guaranteed retirement at income and you're trying to get as much as you possibly can for your 401k or your IRA or just maybe the money that's sitting in your brokerage account, right now is a great time because interest rates are so high. Now, again, you don't have to worry about that being callable because annuities are not callable. Okay, so if you put something into a contract, that contract is set. If it's a fixed rate of return, you're going to get that. Now, keep in mind, when these insurance companies, when they sell you these annuities, they're also purchasing a bond. Now, of course, if interest rates were to go down, if you have to surrender your policy early, then that's when you incur some surrender charges because they have to sell that bond, and so a lot of times they will incur a loss. It just depends though. So that's something to think about. If you're thinking about locking something in, then make sure you have some savings on the side so that when you do decide to put money into annuity, and if you do have some emergency that happens, that you'll be able to access your emergency savings and not your annuity. And of course, there is the MVA charge, stands for Market Value Adjustment, which really depends on the interest rate environment. If the interest rates go down from where they are right now, then the MVA will actually be a positive on your account, which is pretty nice. Right now, rates are high, and which means when they go down over the next few years, hopefully they will, then of course the MVA adjustment will be positive for people. And of course, if you're looking to lock something in, you're never going to have to worry about your annuity being called. Okay, it's not like a redeemable bond. It will never be called. If you lock it in for 5 years at 5.8%, you're going to get it. Okay, it doesn't matter if interest rates go down to 1%, you're still going to get that locked in rate. And if you're thinking about even longer, 7, 8, 9, 10 years, there's some pretty good rates out there right now if you want to take advantage of them. And of course, the income side of things, with income annuities, they're just doing so well right now, and people are getting so much more income than they were in the past. And they're locking it in. They're locking it in for the rest of their life. So anyways, all right, if any of that makes sense to you and you're thinking, hey, you know what, maybe I should look at annuities more, maybe I should think about this as far as my portfolio, as part of my income plan for retirement, then book a call. You'll notice that there is a link below the video, and we can chat about your financial situation, your retirement, what you're looking for, and we'll go from there. So anyways, thanks again for watching. and I look forward to seeing you in the next video. I hope you enjoyed today's video. Have you anything to add to it? Do you have a question? Do you have a concern? Anything you want me to clarify? If you do, please go to the comments section and let me know.